Marta.
Thank you, Chair. My first question is, what is the use of bank stress tests? Last year we had these stress tests, and it didn't help identify and prevent cases like Bankia. So what surprises can we expect in the future? The second question is, Spanish banks are now showing the problems derived from the housing bubble. Bankia is now in need of 19 billion recapitalization. Why not euthanize these banks who have made wrong decisions, like Paul Volcker said last week here? And why do we have to make taxpayers pay for the wrong decisions of the private sector? Isn't Ireland an example to look at? People are paying, the private debt was turned into public debt, and now Ireland is on life support. Thank you.
Now, the EBA stress test will be terminated in June next year. There was a previous stress test that was done a year, I think more than a year ago, no? And so I think this again shows that much greater collaboration must be in place between national supervisors and whatever central mechanism for banking supervision is conceived. And if I may say so, greater centralization of supervision is essential. I think the Bankia and other cases like that show this, show that it's probably simpler to manage. The communication of certain recapitalization needs are simpler to manage if the decision is more centralized. I think that is in a sense, the lesson that I draw from this. Also, your second question is actually quite relevant. How can we? I mean, why do we keep on using taxpayers' money for recapitalizing banks and basically filling the holes left by unsound private sector decisions? Well, let me say that in a forward perspective, we view that the prudential regulation on CFIs really as a response to your question. The idea is to have a resolution system in place which basically has two objectives. The first is not use, never use any more the taxpayers' money to resolve systemic entities. And the second is to make sure that we don't experience again the disruption in the payment system that we had after the Lehman crisis. I think all the ideas that we have been discussing, that you had as a committee explored first 2 years ago, really answered to these two questions. So in a forward-looking perspective, I think the answer lies in this combined deposit guarantee scheme with resolution fund and centralization of banking supervision. But going back to now, and often what happens is that if banks are being, as you call, euthanized, you have insolvencies. Because if it's not the taxpayers' money that's being used, it's the creditors that are being not repaid. And so you have insolvencies. And we have basically discovered that if insolvencies aren't managed by a resolution, with a resolution criteria, then they become systemic. They tend to propagate themselves. Then you turn a local banking crisis into a systemic crisis. I think that was basically the main reason why our national governments have chosen the route. Not always, by the way. Some banks had been closed, had been euthanized. The judgment is that the government always has to take is whether this is going to cause a systemic problem or not. And if it doesn't, usually good governments basically euthanize the banks, wipe out the shareholders, and leave the unsecured, both senior unsecured, but also sometimes the other creditors has not been repaid.